Everyone, it's Kirk here again at Option Alpha. So with the market a little bit in a free fall right now, I just wanted to record this trade that I'm going to be doing, which is a VXX trade. This is the iPath VXX index, which basically tries to track basically VIX and does like futures rolling and stuff like that. So it generally will tend to move down on a really long time period. You can see this between the times that it does this massive reverse split. So you have this like downward trending, motion of the ETF as it goes through, or ETN, whatever it is. I forget which one this one is, the ETN, ETF, whatever. And then it'll reprice and it'll reset, and then it'll go down, 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 and down. So it just went through that process. So it's going to be on the downward move. But what I like doing is when the markets have really, really big spikes in volatility and the market itself goes down, where you see these big spikes up in VXX, I like to sell those short. So I like to do either short call spreads or short put spreads. It doesn't happen all the time. It's not something that you can do like every single month or whatever. I know some people try to do that because you can get run over in the sense where you sell premium and volatility is too low, and then you get run over and the train kind of rolls you over, right? Where the volatility just explodes and it goes through your position. So I only really like to do these once the VIX is elevated and VXX has a big spike up. Today, I've been kind of watching this and just waiting to see. I don't know if there's a perfect time or not. It's definitely much more of a manual, automated-ish type trade or like hybrid trade. But the VXX is up today 9%. So seems like a good opportunity to at least dip my toes in the water and start doing it. Stat-wise, it's one of my better tickers. Like generally speaking, if I go into live trades and then I just filter all live trades by symbol and VXX is one of my better trades. Now, again, not a lot of positions because we haven't had a lot of opportunities like this. It doesn't always come up, but when it does, it tends to be good opportunities. And I have tried a combination of doing the long put spreads and the short call spreads. So it's just going to be a function of seeing if either of those opportunities kind of work out. But I think there's something here to do. So what we're going to do is we're going to grab a new position. You can actually do it right from the screen. Again, this is just what I'm doing, so please don't take this as gospel. It's not recommended trading advice. You do your own research, your own homework. This is just what I'm doing personally for my own account. So I'll go down to short call spread in this case, and then we'll look at, and I try to give it a little bit of time. I don't know, maybe not. I don't do like the inside days right here. That just seems like too close. I mean, it could roll over, but I do want to give it time. Like it's generally going to be downward pulling just by the construction of the ETF. So because the futures contracts has to deal with. So I generally will give it more time. I like to do 30 days, but the monthlies are 45 or 42 days. They're probably pretty liquid. So there's enough open interest in there to do it. When I've set up these before, and again, this is just totally subjective on how I do it, but I would set these up with something at the money or near at the money, because the further out you go, it's just not going to work out. I don't think I would do anything in the money and hope that the market goes down in the money. I just want to set something up at the money or near at the money. So if the market's at 52.68, I would set something up at 53. And then typically what I'll do is I'll start analyzing the position, maybe like $5 to $10 out. So we'll go here to the 53.58s. Now the trouble with this is that it's really hard to do, especially with this one, to do the EVs and the risk reward, only because this thing is, by its natural construction, rolling those futures contracts as it goes, it's going to be downward pulling. So I don't know if I would, in this case, look at it more on the EV perspective, because I'm not trying to do this over and over and over and over again. This is definitely much more of a directional play for this one than anything that I would do. So I'm just purely looking at these numbers here to see if, hey, look, if I think I'm willing to take, this amount of risk on a trade like this. And I would maybe ladder into this where I do, maybe a position now and then do a position a couple days later. If the market keeps going higher, if I can hold and roll these positions enough, they should do okay. Not that they're all going to do okay, because I haven't had them all do okay, but this is kind of, maybe the setup that I would look for. So I probably look at doing something a little bit wider just to see if going wider, it doesn't really seem like it moved the needle that much. So the extra premium you get for going wider, not too much. If you go back down to the 58s, we're talking like $40, but we're adding $100+ of risk. So I don't know if it makes sense. So maybe even going slightly more narrow here might make sense. Yeah, that's okay. I mean, it's still okay. Then you'd have to do more contracts, a little bit tougher to fill. So maybe we do something like this. probably somewhere in between, maybe somewhere 57. I don't know, those 58s like actually pretty good, price out pretty well right now. So I'll try to do something around those 53, 58s. So mid price is about 118. So we'll try and shoot for about 118. We'll work the whole thing. We'll do patient, smart pricing, try to get more trades in there, and then we'll throw this into my trade ideas bot. I leave the exit options off for now. You could probably do something in there, but the goal would be to let it expire. So if you wanted to do something super, super high on the profit taking, you could. Obviously, it's your choice. I'm not. I'm just going to try to let this thing expire. I have notifications set up in case it gets to expiration. I need to remove the position, but I'll try to do something around 118. So looks like it's just going to try 118 because the spreads are too wide for me to try any other additional pricing. So we'll let the order work. Okay, actually did get filled there. So we did get filled at 118, which was good. So good little trade. That's all I wanted to show you guys. That definitely would probably get into another position in this one for sure. If VXX continue to move higher, I grab another one. Again, my thesis and idea on this is that generally when we see VXX go this high and we see these big spikes, they tend not to last forever because this ETF is constructed to go down as it starts to roll futures contracts. So for that reason, I like doing the short side of these positions, whether it's a short call spread or a long put spread. But I like the fact that I could potentially let it expire out of the money with a short call spread. So that's why I did it. I hope it helps out. If it does, let me know in the comments. Until next time, happy trading.